Welcome to the Explainer. So today we're tackling something that's honestly a total game changer for how we handle our money, the South African Household Chart of Accounts. I know it sounds super formal, right? But stick with me, because it's actually this brilliantly simple audit-ready framework made specifically for your personal finances. And it is absolutely perfect if you're using lightweight, powerful tools like TurboCASH. Look, we all know the usual financial headaches, the messy spreadsheets, that knot in your stomach during tax season. Well, today we're going to ditch that stress and take complete control of your net worth.
Here's our agenda for today's Explainer. We're going to cover Section 1, the accounting gap, Section 2, the core numbering matrix, Section 3, tracking your side hustle, Section 4, managing an informal shop, Section 5, SARS provisional tax, and finally, Section 6, maximizing rebates. Basically, we're taking your annual SARS e-filing from a total guessing game to a really simple data-driven exercise.
Okay, Section 1, the micro-business accounting gap. Let's kick things off by talking about a massive pain point for so many of us trying to juggle personal finances, run a household, and maybe keep a side business afloat all at once.
So, let me ask you something, and be honest. Have you ever mixed your side hustle cash with your grocery money? If you're nodding your head right now, trust me, you are definitely not alone. Fluidly mixing personal and business cash is exactly what causes absolute chaos for households. Think about it. You make a small sale, the money drops into your main checking account, and then, what? 2 hours later, you use that exact same pool of funds to buy milk, bread, or pay the electricity bill. By the time tax season rolls around, trying to untangle that mess is literally a nightmare.
And the real problem here, when we actually try to get organized, standard out-of-the-box corporate accounting templates are just way too intimidating. I mean, if you're managing your books on a smartphone or a basic desktop setup like TurboCASH, you absolutely do not need a ledger for deferred tax liabilities or amortization of intangible assets. No way. That just adds so much unnecessary clutter. You need a system that speaks your actual everyday language. We literally have to strip away all that corporate jargon and build a clean, audit-ready framework that actually works for individuals and microbusinesses. Which brings us to Section 2, the core numbering matrix. This right here is the structural solution to all that chaos we just talked about. We're going to look at a compact, intuitive, 3 to 4 digit numbering convention. So this architecture basically organizes your primary ledgers into really clear numeric blocks. Think of them almost like buckets. The 1000 series is dedicated entirely to your assets, so your primary transactional bank account or your savings. Then the 2000 to 3999 block handles your liabilities and capital. This is where your credit cards and your SARS tax liabilities live. Moving on, the 4000 series cleanly tracks your income and cost of sales, meaning your main salary and your side hustle revenue. And finally, the 6000 series captures your expenses, your groceries, rent, utilities, the usual. Organizing everything into these specific blocks guarantees incredibly quick data mapping. It just makes sense,
All right, Section 3, tracking your side hustle. Because this architecture isn't just for tracking your grocery runs, it is perfectly adapted for the modern economy.
The absolute crucial point here is an operational rule we call the drawing separation, which is mapped to ledger code G320010. Remember how we talked about the total chaos of mixing your cash? Well, this is your explicit operational safeguard against that. By using G320010, you track exactly how much cash you intentionally pull out of your side hustle to fund your everyday domestic life. Flagging your spending with this exact code stops those terrifying accidental cash flow shortages in your startup dead in their tracks. It ensures your personal and business cash never, ever improperly mix in the software.
And let me tell you, this separation is going to be your absolute best friend when it comes to compliance. On one side, we have everyday domestic consumption, things like your groceries, dining out, or paying rent. Now, under South African law, these are standard, non-deductible expenses. But on the other side, we've got operational costs. These are your claimable expenses, like buying trading stock or paying for the business data you need to run your payment terminals. Segregating your active trading turnover from your domestic consumption is exactly how you perfectly align with South African tax reporting requirements. It means you can actually scale your business without losing that pristine audit-ready clarity.
Moving on to Section 4, managing an informal shop. This framework is super adaptable, and it extends really easily to dedicated small retail setups.
We're looking at a Spaza shop template here, which is designed specifically for quick, daily reconciliation of high-turnover goods. And just notice how relatable and grounded these essential Spaza shop accounts are.
Instead of that intimidating corporate jargon, we're using everyday language that informal retail operators actually use. 1010 is literally just your till cash, the physical cash sitting in the drawer. 1050 is your retail stock, so your bread, milk, and maize meal on the shelves. 4010 captures your general retail sales. 6010 is for your rent or site fees for the stall. And 6050 tracks transport and fuel for those really crucial trips to the cash and carry wholesalers. It is highly practical, super functional, and just ready to use from day one. Now here is a pro tip for you shop owners. Keep it lightning fast. If you run a spaza shop and you occasionally give a little bit of credit to trusted neighbors, whatever you do, do not bog down your software with heavy, complex customer subledgers. Just don't do it. Instead, use a single generalized account like G13000 Customers Control. Avoiding those unnecessary subledgers keeps your accounting software incredibly fast and ensures it runs perfectly on a simple laptop or even a basic mobile app.
Okay, let's look at Section 5, Tracking SARS Provisional Tax. So what exactly happens when your side hustle really takes off and your taxable income actually forces you into provisional tax status?
Let's walk through the provisional payment cadence together. Basically, when you hit that threshold, you shift from paying tax once a year to paying in advance installments. Step 1 is your Period 1 payment. This is due in August, and it's cleanly mapped to Ledger G2 20100. Then, Step 2 is the Period 2 payment in February, dropping right under G2 20020. And finally, Step 3 is an optional September payment, just to correct any underestimations you might have made. The beauty here is that using these specific liability ledgers natively aligns your records directly with a SARS ITR12 wizard. You get total 100% clarity on exactly what has been paid and when. No more guessing games.
And that brings us to our final section, Section 6, Maximizing Tax Rebate Claims. Honestly, this is arguably the most rewarding part of the entire framework. So, as we discussed earlier, standard domestic consumer spending is non-deductible. But meticulously separating it out in your 6000 series is still incredibly important. Why? Because it gives you the raw, accurate data you need to rapidly track claimable pro rata allocations. Think about it. If you run a SARS-compliant home office, having your rent, electricity, and internet cleanly separated from the get-go allows you to perfectly calculate and claim those specific allowances out of your otherwise standard expenses. It's like finding money you didn't know you had.
Now, take a look at ledger code G570010. Memorize this one, guys, because it is massively important. This specific code tracks your health insurance and medical aid premiums. By diligently logging your premiums right here, you are directly generating tax rebates on your e-filing. When tax season finally comes around, this number feeds effortlessly straight into your return. It's practically doing the work for you.
And here are a few other incredibly powerful deduction codes you definitely should know about. First, G150020 is for tracking your retirement annuity or Regulation 28 pension funds. Then we have G620010, which tracks your donations to registered public benefit organizations, so your Section 18 deductions. And G610015 handles home loan interest, which is claimable pro rata if you have that home office we talked about or a rental side property. Keeping these categories perfectly clean builds this impenetrable audit-ready shield around your finances. It gives you total peace of mind if SARS ever comes knocking to request a verification of your returns.
So, to wrap things up today, I want to leave you with this question. Is your current accounting setup working for you or against you this tax season? I highly encourage you to adopt this logical household chart of accounts in a tool like TurboCASH. Strip away that complex corporate jargon, protect your audit trail, and truly empower yourself to take complete, unshakable control of your net worth. Seriously, it is about time your money finally made sense.